Good morning and welcome to the Killik & Co market update. We're right in the middle of reporting season with lots of companies reporting every day. But one of the key takeaways so far is that some of the big tech companies have missed expectations, whereas some of the more traditional value-orientated companies such as Shell have actually beaten expectations. With this in mind, it's worth reflecting on the turnaround that we've seen in terms of the performance of growth stocks. These have been outperforming for the last decade, but that does seem to have turned around somewhat over the course of the last year. On this chart here, we've got the S&P 500 index in the grey in percentage terms over the last 10 years. In the pink, we've got the growth constituents of that index, and you can see they've massively outperformed over this time period, despite this year's fall. And then in the green, we've got the value constituents of the index, and you can see they've underperformed over this longer time period. However, if we look at this same data over the course of just the last year, you can see that actually the value constituents have outperformed, whereas the growth constituents have underperformed. And this is just a good reminder of the value of having a diversified portfolio with exposure to lots of different types of companies. Some big tech companies this week have reported profits that were below expectations, and while this is certainly disappointing, in the case of some companies like Microsoft, Amazon and Alphabet, the profits are still in positive territory, and furthermore they are still growing. Just because these companies might be going through a period of slightly slower growth, it doesn't necessarily mean that they can't continue to perform over the longer term. All of these companies are covered by the Killik & Co research team, so please do give us a call if you would like to talk about the latest results in a bit more detail. The company that I'm going to talk about in this video is Meta, purely based on the extent of this week's share price fall. When the results came out, the shares fell by 24.5%. Here's the share price chart over the last 10 years. The company IPO'd in 2012, and you can see following this year's share price fall, the share price is now back to its 2016 level. When the latest set of results came out this week, there were really three key areas that investors were keen to hear about. The first was engagement. To what extent are users engaging with the core platforms of Meta? For example, WhatsApp, Instagram, and the original Facebook platform. And actually, the engagement figures were above expectations. There had been some concern that perhaps some users might be moving on to TikTok, but at the moment, this doesn't seem to be having a detrimental impact on the users of Meta. The second category was revenue. How much is the company making from advertising? And actually here as well, the figures were slightly ahead of expectations. The final category was expenditure, and this is the key area of concern. A big increase in expenditure is expected, and this is largely due to the development of the metaverse. And investors are quite concerned to see so much money being spent on a fairly new project that isn't yet a core platform for the company. To add to that concern, people are worried about the extent of control that Mark Zuckerberg has over the company. There are two different types of shares in Meta. The first is A shares, and this is the type of share that regular people are able to buy. And with every A share, you get one single vote. Then there are B shares in the company, and with every B share, you get 10 times the normal level of votes. Now, Mark Zuckerberg has most of the B shares, and that means that he only earns 13% of the company, and yet he has 58% of the votes. So even if all the other shareholders disagree with the plans for the metaverse, Mark Zuckerberg still has the controlling vote. And finally, some more positive news to finish on. This week on Wednesday, the UK set a new record for the amount of wind power generated in a single day. And to add to that, the International Energy Agency published its latest report, and it's brought forward its predicted date for peak fossil fuel demand. And the reason for this is that the situation between Russia and Ukraine has encouraged global leaders to invest a lot more money more quickly into renewable power generation. Progress has certainly been made in terms of climate change, but there is still a lot more that needs to be done. Moving on to have a look at next week, it's still very busy in terms of companies reporting, but we're looking ahead to results from Airbnb, Estee Lauder and Ørsted. That's it from us. Enjoy the weekend, and we'll see you next Friday.